Hey, this is June from Turning Point Life Investment, and this video is for May 2nd, 2009. So we ended another calendar month for April, and let's take a look at the market using SPY from a long-term perspective, starting with a 10-year monthly view. So as you notice, we ended another month with another white candlestick. Okay, so that's an indication of bullish momentum. And so far, this is the first candlestick of the month of May, so there's really not much to say about that. But we have two consecutive months of bullishness, which is good, which is what's needed, especially after this huge decline. The market does need to correct itself if it does want to go further downwards. So we need this correction just to alleviate itself out of the oversold conditions and this huge downside momentum. Not to mention that notice how far it was stretched out from the moving averages. So I mentioned before how usually when a market is trending like this, the moving averages is always a great target for pullback. So I would expect some kind of pullback towards this 20-day moving average. But however, usually it won't go straight up. I would expect some kind of correction either sideways or maybe a little bit down before hitting back towards this 20-day moving average. And by that time, this moving average will come down and meet it. So I would expect the ultimate pullback, if we're talking about a long-term perspective, would somewhere be around possibly the 100 level for the SPY. And also, if I were to pull out the Fibonacci retracements here, all the way from the top, the 38%, which is usually the first level of fulfillment for retracement, once again, it's around the 100 mark. So this is it's pointing towards this level as probably the ultimate resistance level for this entire correction that's going on. But of course, that won't happen until a few months later on. Okay, next we go into a 3-year weekly view. The market just keeps pushing higher and higher. Even though I mentioned a few videos before that I do expect some kind of pullback, some kind of correction, but the market hasn't given us that yet, at least not in this week. So you notice how we managed to trade above this 20-week moving average. So naturally, the next target would be this 50-week moving average, which is once again around this 100 price level. So that would be roughly around the same target that we're looking at from a monthly point of view, from a long-term monthly point of view. So once again, this is a good target for the market to shoot for in a long term, in weeks and possibly months to come. Okay, now we're going to a 6-month daily view. I said last time that you always want to expect the unexpected. You never know what the market can do, even though there's evidence and there's signs that's pointing towards bearishness, a pullback, but you always want to prepare just in case that never happens. And a perfect example would be this week. I mentioned last week that I was expecting some kind of pullback, given all the evidence for it, but we managed to push higher into a new high this week. Okay, so we managed to barely surpass this resistance level around the 88. So 89 is going to be the new current resistance level. And then notice how on Thursday it stopped right around 89. Okay, so that was a perfect stop at the even price level. If we do get another push by the bulls, I would expect the next target to be hit right around the 95 area. So if this bullishness continues, like I just said, this would be a very likely target around 95, 94, around there. If, however, this is the top for this entire correction, let me take away the studies. Okay, if we do get that pullback, I would say around 83 would be a good likely target for a pullback. And if it's a deeper correction, I would say somewhere around the 81.50. So around here, pretty much the same levels that I mentioned last week, even though we didn't get that pullback this week. But nonetheless, if this is actually a top right here, then 83 would be a very good likely chance that it might get hit next week. But like I said, you always want to expect the unexpected. If this market does continue its bullishness, look for this target around here. I don't know if it'll hit next week, but if it does, this is a very good target for the market to reach on a bullish level. On a bearish bias, then I would say around 83, 81 and a half if it's a deeper correction. Overall, bringing back the studies, you can see how the market pretty much from the month of April, let me take away some of the lines here. From the month of April, this is pretty much a huge correction pattern. Now that I look at it, this whole thing is a correction pattern. Main clue is look at the volume. The volume is very low, okay, some of it below average, and that's usually an indication of a correction. Another thing is notice how choppy it is, right? Notice how all the overlapping highs and lows, right? That's another sign of correction. It's a lot of choppiness, a lot of uncertainties, a lot of whipsaws, just like here where we had this correction where notice how a lot of overlapping highs and lows. Same here, overlapping highs and lows. When you get a nice impulsive push, you would see something like this, nice push straight through, nice push, okay? And then this one we had a nice push towards the upside right here. But after that, after the month of April, or during the entire month of April, that's where the whole confusion comes in, right? The market wants to go higher, but it doesn't have enough strength to push it that high. And the bears want to come down and push lower, but it doesn't have the strength to push it lower, okay? So that's a lot of indecision going on. You can even tell by the size of these candlesticks. Notice how wide these candlesticks are intraday or on the daily view, but even here you can see how narrow these candlesticks are. So a lot of indecisions, a lot of uncertainty going on. And if we bring our attention to the VIX, you can even see from the VIX how there's really not a whole lot of sign as far as bullish or bearishness from the VIX either. From a sentiment point of view, same thing, right? It's not really telling us a whole lot other than a possible bearish divergence going on right here, where on Thursday the market made a new high, but the VIX did not make a new low. So that's another clue to some bearish divergence going on for the market. Okay, so overall, just to conclude, I would say, we'll probably get a better clue as to what the market would do next week, only because we finished the month of April and we're starting a new calendar month. And not to mention that, we're more or less into some kind of volatility contraction. Okay, for those of you who use Bollinger Bands, one of the things that's great about Bollinger Bands is it's to kind of show contraction and expansion. All right, right here's a period of contraction. Notice how when the bands kind of expand, the market exploded, right? And you notice here the bands are contracting, so the market's going into some kind of contraction, and eventually it will have to explode in either up or down, all right? That's the only question, is we don't know in which direction, but we do know that some kind of movement is pretty imminent, and I'm expecting that kind of movement to appear this coming week, at least for the first week of May.